Welcome to Innovators Inside, the podcast for people working in corporate innovation, brought to you by Alchemist X, the corporate services division of Alchemist Accelerator. Here, you'll follow host Rachel Chalmers, head of Alchemist X, as she talks to the industry's highest achievers and most compelling thought leaders. These are fly-on-the-wall conversations with leading practitioners in the field. They'll share their lessons learned so that you don't have to go through the painful experiences that they did. So sit back, relax, and get ready to level up.
My guest today is Corbett Gilliam, the Corporate Development Manager for the world-renowned Advanced Technology Development Center. The ATDC is a science and business incubator that's part of the Enterprise Innovation Institute at Georgia Tech. Corbett, you've been part of the Atlanta science and tech scene since your undergraduate degree. Can you tell us a little bit about your early career in the startup scene in Georgia?
Yes, I can. And again, Rachel, thank you for having me.
It's a pleasure.
I'm excited to spend some time with you today. Go back to the heyday of the dot-com boom. That's when I started. So I graduated from my undergrad in 1997, and I had been reading about eBay and Amazon and all these companies just coming out of nowhere and going public, and just all the excitement that was going on around technology at that time with the internet. So I started reading about venture capital and never had really heard about venture capital and how you get it and what it is used for. So from reading that, I decided I want to start a company and I want to take advantage of this time. So I naively, just coming out of college, just came up with an idea, which was an executive website for executive travel goods. So like briefcases and Palm Pilot cases, those were really popular at the time. And some, golf clubs, just a bunch of different things like that. And I created an e-commerce site and then really found out early on that that's not going to work. And it wasn't a lot of e-commerce was popular, but it just wasn't what I wanted it to be at that time. So I moved more into social media before social media and created a site for attorneys and CPAs to develop their own personal website. And so at that time, nobody really had a website. And this gave you the opportunity without the knowledge of code or anything like that to be able to have a website. And I had strategic relationships with the Washington Post and NPR and different groups like that to pipe in content because people really didn't have anything for their personal website and nothing to go on it except like a blog, which that wasn't really popular yet. And so I got the MVP ready and then just really went out and started trying to raise money. And the way I did that was I went to the one area in Atlanta, there was a lot of money, which was the financial district. So it was down in Buckhead. And all I did was go around and knock on doors. And I would go to an office building, look at the kiosk, see the financial institutions in there, and then go in and pitch to the front desk to try to get into somebody that would listen.
Yeah, the naivety is really key in your early career, isn't it? It's just not having a clue.
Exactly. But what was interesting, and it had to do just with the times where it was easy to really raise money then. I had a one-pager that I had written. I went to this institution that was an investment bank, a small boutique investment bank. I did the pitch to the front desk. The individual at the front desk looked down. They were doing something, not paying attention to me. And I looked down on a planner and I saw a name. And then I mentioned that name. And then all of a sudden I was like, I'm on so-and-so's calendar for this day. They looked down, they're like, you're not on the calendar. They ended up putting me a few days later on the calendar for one of the partners in the firm. And I got in a few days later and he asked, why are you here? And I pitched.
Who are you?
I know, who are you and why you're here? And I pitched him my idea and ended up giving me $500,000. So that was an interesting learning opportunity to see how that worked, to be able to get venture capital money or in the beginning seed capital, but how to begin to execute that to build a business around that.
So millennials, if you've ever wondered why Gen X gets so misty-eyed about the 90s, this is why.
It was a different time. The music was great. It was just a great time period to be able to go through this and learn about the internet and all the great things and really just go out in a naive way and not really think about this is not going to work or this is not the right approach. And it was a great time. So I learned a lot from scaling that business and, I learned a lot about it in 2000 when that came around and everything started crashing, and seeing how, utilizing the money that was invested, how you can do that the right way and then the wrong ways to do it. And, Atlanta there was a lot going on in this city at that time, back in the late 90s, because investment banks were popping up, venture capital funds from the West Coast were coming out, setting shop up. So there was a lot of interesting activity that traditionally in Atlanta were a real conservative market, where it's real estate based, and a lot of technology was popping up.
Where do you think that upwelling of creativity came from? Because I was an analyst in the zeros, and I ended up covering a ton of Atlanta-based firms.
There was a lot of companies like WebMD and just companies like that were popping up, that there was a lot of money from CNN and those types of groups that were here, that were seeing what was happening on the West Coast and decided, hey, there's opportunity here. Let's begin to invest heavily in these and try to make them a marquee name. So I think that might have been some of the things that were going on. I just know that every person you would speak with, if you were in that startup community, everybody had a startup. Everybody had something they were trying to do. And one of the great things with where I am now, working with Georgia Tech, they've been here all along, and there's so much innovation, so much, lots of incubators besides ATDC, and accelerators that they have within their students and even professors, that a lot of innovation comes from that. And that was happening back in the 90s as well.
Yeah, you do see a school like that in every startup hub. There's a big technical education tradition.
Yeah, exactly. So it was interesting to see how this was happening, but it was a great ride. When 2000s hit, everything sort of fell apart, and I was able to sell off some of the assets of the company.
Oh, well done.
And then jump over and begin to work with the boutique investment bank that invested in me originally.
So then you were working on the finance side for the rest of the orgs, is that right?
Yeah, where, when I moved over to that investment bank, they had a whole portfolio of companies that they had invested in. One of them being realestate.com, which that was a really big company that took a big fall in the early 2000s. But I was on the team that helped to foreclose on the assets of realestate.com. And we ultimately sold that to Barry Diller, and he made that a part of LendingTree and that whole group. And I got to advise other companies that we invested in. So that really set me in the course of working more as an advisor within private equity and working with underperforming assets within portfolios.
This will become important later.
Exactly. So I spent most of the early 2000s and mid 2000s doing that. And along the way, I've started other companies working within private equity and really seeing from the outside opportunities. That's what would make me jump in every few years to start another company and then try to spin it off and do different things like that.
A glutton for punishment.
I know. My wife always says that. Why do you want to keep starting these companies? And that is, now working with ATDC and the 150 companies we have in the portfolio, it's interesting to see how all these different entrepreneurs at different stages, how they deal with things, and just really reflecting on some of the things they're going through and how hard it really is to start a company, and how focused you have to be able to break through all the different barriers that come up during the startup stage. From raising money to customer base to constantly building the platform and tweaking the technology to strategic relationships, and then not to mention all the talent that you have to hire to bring on, and then retaining them as you're trying to scale the business.
You spent a couple of years in the United Kingdom. How did that come about, and what did you take away from it?
I was coming off of starting a company, E.04. From there, my idea was I raised venture capital for E.04 and really ran the company for 3 years, and then wanted to step back. And the idea there was to bring a management team in And from that management team, let them take the whole entire business and run it, and then me jump into something else. Well, that something else was this group based in Geneva, Switzerland, which was a private equity group that had a portfolio of 7 companies. So we had an office in London as well, and I was tapped to take over one of them and to really pivot the model. And it was a company called Connectic. And it was a collaboration-based SaaS product, mainly for Rotary International. And so they wanted to connect all the Rotarians around the world with their service projects. And I had gotten into that model and had seen where didn't think that would work, just the way that that structure is set up. So we went after more of the chambers of commerce and business associations.
Where there's a financial incentive to collaborate.
Financial incentive, and it also helped with retention of membership,
Right.
and then also building their membership, because it's all about how many members they can keep in, bring in, and then keep.
The network effect.
Exactly. So I came in, that was one of the first things that I did, but we rebuilt the product, and then I basically launched it in North America and throughout Europe. And I had an office also here in Atlanta and was able to bounce back and forth. And I did that for years. And it was great because I ran 2 of their companies. One was like I mentioned, Connectic. The other was a live streaming platform. But one of the biggest problems was the travel. It was anywhere from 2 to 3 times a month. I was going either to Geneva or to London. And it was just very difficult to be able to keep my sanity and keep my mind straight, because I would get there, jump off a plane, go straight into meetings. But what was interesting was the reach. Working in international business, I had teams not only in Geneva and London, but also Bulgaria and just a bunch of different countries around the world. And we would come in, have our weekly strategy meetings and staff meetings. It was just interesting to see the different perspective and different skill sets that different individuals had. It was a great environment to collaborate, and instead of just thinking a one-track way of innovation, to really understand other areas and how they look at innovation and what was needed for innovation in a different country.
Did you run into any experiences of culture clash as you tried to negotiate, the differences between American and European business culture?
We worked with each other so much that we learned each other's personalities. And I knew if I'm, working with our team in Germany, there's things that I would do here just from, my business background that doesn't necessarily work or translate well over there. All just sort of learned how we operate. And you just have to be willing to work around that and to understand where they're coming from. Early on, we would clash and hit heads, and then we all figured out that this is getting us nowhere.
Yeah.
with the whole plan of getting whatever product it is out and executed and rolled out. That was a lot of learning, but I learned so much from working with the different groups. And we still today communicate on Skype and LinkedIn and talk back and forth just to see how each other's doing.
That's great. Was it the travel that wore on you so much that eventually you looked for a position back in Georgia?
It was. I prefer, in this day and time, it's a little bit easier to do Zoom and some of those platforms. A few years ago, everybody wanted you to be there in person, and Zoom just wasn't good enough. So that ultimately was one of the reasons that I decided to step back. And luckily, with ATDC, it that opened up, and it was this corporate development opportunity for me, number one, to work with the country's oldest technology incubator, but also to work with Georgia Tech and be able to really build a network within their organization. And then Engage, which is a venture capital fund that was started by Georgia Tech, was just launching, and they are housed within ATDC. So I had the opportunity to work with them. So those 2 things are really what attracted me to want to work with ATDC. So I came in and was really given this opportunity to take over this corporate development program and do it how I wanted to do it. One of the things I wanted to do, instead of just the traditional way of have a company come in, you do a pitch, do a dog and pony show, and then that's it. I wanted some real business being done. Similar when I worked with private equity and I was doing strategic relationships and partnerships. So one of the things I started was I called a deep dive, and everybody, all my colleagues laugh at that term, deep dive. But that's what I do with these enterprises, where we really get in and understand areas of focus, their corporate culture internally on innovation, budgets they have for pilots, number of pilots they've launched, decision makers that may need to be in the meetings. And then together, once we gather and harvest all that data, together with the enterprise, we curate a list of ATDC companies. We take all 150 and then narrow them down from anywhere from the 3 to 5 companies. With that, it makes it easier. You're not seeing 10 or 12 companies and then you've already forgotten what the first 2 are. There you have, small bite size, a number of companies. Each company has a 30-minute time slot. So usually it breaks down to a 20-minute pitch, 10-minute Q&A. And the idea is for them to really break the ice and be able to understand and see the synergy and then go on to a second and third meeting beyond that. So I was given the opportunity. That was one of the reasons that I really wanted to move over, to be able to incorporate that, to get some real movement in pilots. Not a lot of incubators were doing at the time.
Yeah, that's for sure.
Focused on launching pilots with these enterprises.
What are some of the things, based on these conversations that you're having with the enterprises, these deep dives, what are some of the commonalities in the things that they struggle with right now?
It's a whole variety of different things. Before COVID and the pandemic, it was one thing where it may be one case, computer vision and the consistency of a product that they're manufacturing. Today, it has a lot to do with collaboration, team collaboration, how to do things in a touchless way. If you're dealing with a sales force or even specific types of manufacturing. I work with food companies, which have to incorporate various procedures to be able to manufacture food with sanitation stations and those types of things. So I think with one of the pieces of working with enterprise, everybody knows they need some type of innovation. And a lot of them think that they are innovating when they're really not. And so one of the trends that I've seen really over the past year are these large enterprises bringing in entire teams. So we've had, one group that had 150 senior executives from around the world. They came in, and the idea of that session was to break them out of their 4 walls when it comes to what they've been taught internally about innovation, and to break them out and really show them what's happening outside of the 4 walls and where innovation's happening and how to sort of rethink and take their mind out of what they're used to and think about how to incorporate innovation into their day-to-day. And some of the things that I've learned is you have a GE or a company like that, somebody's not going to put their neck out to really push an early stage company, even if it's a great technology, because there's too much risk at their job and being promoted and just different things. If that early stage company can't add 100 million to the bottom line for that specific business unit, it's a very far reach. So it is teaching and really building some exposure to innovation to these early stage companies and showing them how to work with an early stage company and how to incorporate that in different stages.
Because every big corporation is an exercise in hedging risk for everyone who works for it. That's what
Right.
corporations exist to do. But in the same way, every enterprise becomes a success disaster because they have a set of survival strategies that they eventually outgrow, and it's very, very difficult to change those survival strategies mid-flight.
It is. So at ATDC, with the number of verticals, so we have a retail tech vertical, we have a fintech vertical, a healthcare, and advanced manufacturing. So I bounce between all of those. One day I'm working with Macy's, next day I'm working with Johnson & Johnson, and then Honeywell. So we're all over the board, but it's interesting to see and understand where these companies are thinking, how they're thinking, and where they're trying to move to, and the steps they're trying to take that movement and how they do it. And everybody does it differently. So there's not a real cookie cutter way to delivering a pilot. It's just as you go, understanding who to speak with, how to pitch it, and then how to move it to the next level. And then also how to keep pushing it once the meeting's happened and things start to die down, how to keep moving it forward to be able to get it to that point so we can light a pilot.
To your point about cookie cutters, I think that's one of the things I find so compelling about corporate innovation is that it's really hard to imagine a way you could automate this. There's so many human factors involved. It's so much about consensus building and aligning interests, and it's very hands-on.
It is. There's a lot of, I always call it background stuff that I do to really keep the ball rolling, if it's from the enterprise side or even the early stage company where they may have 2 or 3 meetings and they're like, this is not going to happen. And to keep them energized and being able to see the big picture of where this could lead them, if they could just keep along with the different phases needed to get to that point of a pilot.
This is why so many startups like doing consumer tech rather than enterprise tech, because enterprise tech is slow and it's difficult.
Right.
It takes a long time.
Exactly.
But I like enterprises because that's where the money is.
It is. That's where it is. And one of the other areas that I've found that's interesting is government, and working with the Department of Defense and some of these other groups where now they're very aggressive when it comes to innovation. They have money to spend on autonomous driving, AI, just different technologies. So I've done a lot, and we've launched, I think it was last year, maybe 4 pilots with the Department of Defense. And I'm trying to increase that this year with some of the exposure we're getting. But it's a long journey, but it's rewarding if you can build that up and have a good number of enterprises you're working with. It helps with raising money and also strategic relationships as you scale the business.
When you look back on your work in corporate innovation in particular, what are you proudest of?
I think at ATDC, for starters, I'm proud of being able, just all the pilots we've launched. And I always say it's not because of me. A big part of it is ATDC and the network of ATDC and all of the different talent that's there, but also Georgia Tech, and being able to harness the power of Georgia Tech and what's coming out of it and the technologies that are developed there. And then that opens doors to these enterprises. And I think that's the first piece, is being able to launch these pilots and not have to take anything. Because usually if you're starting a company and you're doing a pilot with an enterprise, you're trying to take money, you're trying to get a payment, you're trying to do something like that. With us, we're an economic development play. So I'm getting the highest number I can get for our companies in our portfolio. And they keep it, so it just makes it so clean to be able to jump back and forth and just really focus on our companies in the portfolio and getting them paid and then helping to grow that. Also, another answer to that would be just really, I enjoy matching companies up with enterprises and understanding what an enterprise wants and needs, and then finding companies that can fit within that need.
You're a yenta, you're arranging these marriages.
Right. And that's what makes it interesting, where I don't have one thing I'm selling. I can jump, like I said earlier, from fintech to retail tech. Retail is one thing that's just very, very interesting now with what's happening and the whole digital transformation that's happening with brands and traditional retail, brick and mortar. That's just is fascinating. And then supply chain, just all of that combined. So I enjoy just being able to go through and uncover opportunities. And it's a great recruiting tool for ATDC too.
Corbett, you find a magic lamp on one of your walks and you rub it and a genie comes out and says, I'm going to give you one do-over. What are you going to do differently?
That's a great question, by the way. One of my do-overs would be when I was starting companies. One of the companies, and I don't want to say the name of it because some of the people may be listening, I had raised money for the company, and I had a co-founder, and we had brought in some management, and we had a little argument internally, And one of the things I would have done differently was stay the path and not leave the company, where I ended up where I positioned myself for the board and others to want to be able to move, and they gave me an ultimatum. Then I don't know what would happen, but I ended up taking the ultimatum. But just being positioned in that was uncomfortable. And the do-over would be I would have more faith in me and what I can do, what my vision was for the company, instead of thinking I needed to bring in other more senior people to be able to help build the vision for me. Because my whole idea was, you know what, I bring in some senior management, they can help raise money, they can do this, they can do that, instead of really relying on me and my co-founder to be able to do that and really scale it up. Just that little instance of time, if I could go back, that would be one thing I would change, because the idea, we were on to something, and there was a lot of opportunity to really grow this. And then today there's 3 or 4 companies that are in that space.
That's always so frustrating when you had a startup and somebody else goes and cleans up on it. Yeah.
Yeah, and they're doing billions and billions of dollars,
Yeah.
these other ones. And if I just would have been able to feel confident and move forward, I think, we could have been in an interesting position. So that would be one of my do-overs. And then another one would be just to really embrace technology and really just go for it and learn as much as you can and not be so calculated when it came to starting companies in my earlier days. Because as you get a little older and you have a family and all of that, it makes it more difficult to take that risk to go out and start a company from scratch, just with all the blood, sweat, and tears that go into doing it.
What do you think makes corporate innovation so especially difficult?
I think with corporate innovation, it's on in the corporate side, you're in a box, and the way the data flows and what the org charts, the way that is, sometimes it could be stacked against innovation. Some of the most innovative companies that are out there today, brand names, I've done deep dives with, and I have found out that they're just really not innovative. They seem innovative from the outside, but innovation is bottlenecked internally, where lots of great things happen up and that just stops once it reaches a certain level. So I think some of the problem is being able to see the structure internally and to be able to work around that and to be able to look outside of the 4 walls instead of trying to create your own innovation and see what else is being built outside. And it could be a team of 2 or 3 entrepreneurs that have developed a cutting edge platform instead of trying to do it and replicate something like that internally.
Yeah, it can be really hard though. I mean, you talked about the $100 million barrier. That's at the point at which a startup's business starts to seem meaningful to an enterprise, but that's an incredibly high bar for a startup. That used to be our rule of thumb for maybe you should start thinking about an IPO now. So that's almost enterprise from the point of view of an early stage investor. That just makes it very, very difficult for folks who are thinking, oh, we can build it here, to take seriously a company that wasn't invented here.
A lot of times, with an early stage company, they've maybe developed a great platform, but they may be real green. And when they get in front of that enterprise, they just really can't pitch and get across what they're trying to do and how they want to do it, how they want to scale it. So that translates also and is sort of something that I work with our portfolio companies on, is actually their pitch and how that works, and even down to the elevator pitch and how that would work. And I mentioned in one of our first conversations about the elevator pitch how important that is. And Tim Draper is one of your mentors.
Yes.
And he is one that I did my pitch on, my elevator pitch, in the lobby of a hotel
Yes.
with one of my companies. It's very important to be able to have that 60-second pitch and be able to get across what you're doing, even if you don't have the platform in front of you. If you can show what you said it could do, that speaks volumes, and that can move you forward.
It's a really fine balance, because startup folks absolutely have to take the opportunity of being in an elevator with Tim Draper, but at the same time, too much cockiness and too much over-promising and under-delivering is really off-putting to a corporate innovation team. It can kill a corp dev deal.
The technology they're pitching, that if it is a once over and they've had an offshore group throw it together and it really does a fraction of what they're saying it does, they're going to have issues when they're out presenting, raising money. Perfect what you're trying to do and focus on one small area instead of making a robust, multifaceted platform, and get good at that one little piece. Be laser focused. And if you can do that, it's going to be so much easier as you are, in my case, coming into the Industry Connect sessions and pitching to these companies that will really poke holes through what you're doing in person. But if you're able to launch a pilot with them, then they'll really poke holes if it's not what you've sold it on being.
So you kind of anticipated my next question, which is to ask you to distill all of your long experience into a few lessons for our listeners.
At this stage on the entrepreneur side, it is really being able to identify the problem that you're trying to solve and really being laser focused on that problem and trying to develop the best piece of software or whatever your model is that you can. On the enterprise side, the corp dev side, I think it's being open-minded and really being aware of what is out there and how the streets are changing from the standpoint of technology and crowdsourcing and just all of these different platforms that are happening and hatching new technologies. And some of the areas I'm interested in are like autonomous driving. And I've worked with BMW and Mercedes-Benz and trying to find companies, and it could be 2 or 3 people sitting in a garage that have developed cutting-edge piece of software that could be incorporated into a car for autonomous driving. And what's interesting with car manufacturers, traditionally they've done the same thing for 100+ years, but over the past 2 or 3 years, I've really seen them break out of the corporate 4 walls, and go out and really looking for innovation that they can incorporate into what they're already building. And it could be multiple companies. It could be 2 or 3 companies that they bring in, and they're able to incorporate that technology into their core platform.
And how do you measure the success of those kinds of integrations? Like, you've talked about how many pilots you run. What does success look like when the innovation is sourced externally and is incorporated into an enterprise?
I think, from my standpoint, my success is we launch the pilot, it goes well, and then it goes on to a contract. The company's able to incorporate that in some way, shape, or form. So that's the one piece. The other piece on the corporate side is them coming back to me saying, Company A was amazing. We want to buy them. Do you have others that are similar to this that fit these areas? And I found out, with this, my whole idea for this whole corporate innovation piece of ATDC was to create a rich experience so we could continue to have an innovative conversation beyond the first meeting, where, Black & Decker, for example, we would have regular touch base meetings talking about strategy, how they would incorporate a mobile app into their retail side, or whatever the case would be. And that really would instill a lasting relationship where we can move into other topics. So, maybe IoT in one case, but move over into AI and continually have conversations that were productive, where they would want to come back for more because they knew we weren't just selling them something just to make them happy. And then because with the way our model is set up, we're an economic development play, it works well because our enterprises don't pay anything. And so it's an ecosystem that they want to keep coming back to, because we are always adding new companies. Companies that we have in the portfolio are continually moving up in their level within ATDC. So it's a continuous conversation instead of just a one and done type event.
Which innovation has to be.
Right. Because it's changing, and you can see the trends. Like in 2017, we talked a lot about VR and AR, and it's not so much now. Right now, it's a lot of AI, in supply chain, which is interesting to see how that trend happens as well.
Speaking of big changes, how do you think the pandemic is going to affect enterprises long term?
I've gone back and have had a number of deep dives with these enterprises that I've already worked with just to see what has changed, coming out of this pandemic. And some of the biggest things that I've seen is number one, office space. So being able to, these groups that had large sales teams that filled up entire office buildings, trying to rethink the whole having everybody in a 30-story high rise and how to repurpose that, how to have a big number of the team working remotely, companies that have employees that meet customers regularly, how to do that in a way where it's a non-touch environment, where if they're meeting with a customer, there's ways to do that. Talk to pharmaceutical companies that they're mainly known for sending salespeople into doctors' offices, how to redo that and rethink that going forward. Collaboration software is another one that we're seeing that I believe we're just on the tip of innovation within that, to see how that moves forward as these teams are remote and not all together. Zoom and these types of conferencing tools, we've been using these since March. They're going to get better, and it's going to be more collaborative. So everybody has a different approach and a different thought. And I've even seen companies that had one focus that have expanded to more COVID focused on how to bring team members back and how to do that in a way that is safe and keeping the social distancing and those types of things. Companies are still trying to figure out how this is going to look and when they're coming back. So it's interesting to see how this is going to play out.
We talked about this a little in the context of your transatlantic commute, but how do you personally avoid burning out?
One of the things that I do is I love working out. And so I got a regimen that, 5 a.m. in the morning, I do a workout, and it consists of kettlebells and boxing. I love kettlebells, and there's so many versatile exercises you can do. And then boxing is just another great way. So that really helps to blow off steam. It helps to really get my mind set and feel good, feel positive. So that's one thing I do. The other thing is trying to spend as much time with family. And I got 4 kids.
Wow.
They go from ranges from 4 to 10. So I got a 10-year-old, 2 8-year-olds, and a 4-year-old.
All at home, learning from home now?
All at home, and we're trying to keep everybody moving and not being bored. That's a big problem. Spending time with family, that's one of the most important things. But I think truly, if you enjoy what you're doing, then it's easy you'll get burned out, but it's easy to try to unplug and refocus and then come back out again. And this is something I really enjoy. So the off times that I have, like weekends, I try to turn it off, try to do a lot of reading, try to stay away from social media, which that's one that I've found over the years that, if you're constantly glued to that, it can just make you go in different directions.
Dude, you started a social media company. You're part of the problem.
Well, luckily that was so long ago. That was before social media was even a term.
Statute of limitations.
Right. But you see how social media, with all the different platforms, it's effective, but there's a lot of cases where it can waste a lot of time.
Doom scrolling is not good for your mental health.
Right. And it can pull you down into a hole where there's a lot of other more productive things you can do to really get your mind reset. And, I'm a big believer in that, and trying to spend as much time outside as I can and just enjoying nature and what's around you. People say, stop and smell the roses. Doing that, just sort of coming down and seeing what you've done and what your day-to-day is, but try to put it in perspective and not worry about it after the fact, and just roll with the punches.
So now that we've established that social media is the devil, what is the best way for our listeners to connect or follow your work?
One of the best ways is LinkedIn. So or email, old school email. But the easiest way, even though I was talking bad about social media, would be LinkedIn, where I've, LinkedIn's great because it's not like the others where it's more professional. And so it's, you read good articles and different things like that. But find me on LinkedIn or my email, which is Corbett, my first name, .Gilliam at ATDC.org.
What does the future look like for you personally and as you look at our industry?
One of the things I'm interested in looking forward is private equity and going back to that, but actually raising my own fund and having a fund that focuses on underperforming brands or technologies, where I can take a brand that needs to have a digital transformation, let's say, and being able to buy that or invest in that and then really put what is needed, pivot the model, and then really scale it up.
Okay, that is literally the most difficult job in our industry.
I feel with the background I have in private equity, which is interesting to say the least, and identifying interesting undervalued assets, pairing those two together, yeah, it is hard, but I think there's some interesting things that could be done to be able to scale these companies up. And, I've done it on the scaling side, but one of the biggest things I've always didn't have behind me was a bunch of money that I could use to help fuel that.
You're building the network now where you should be able to get those investments.
Well, hopefully. And, I see lots of family offices and other groups like that have money they want to invest in alternative investments. And I look at that as sort of in that category where there's a need and there's not a lot going on. Yeah, you have the big private equity and hedge funds and those types of groups. But I see an opportunity to come in and take some of the relationships that I have on the money side and then on the corporate side and really bring them together to be able to put together a great team.
That really puts the kettlebells into context, though. You are not afraid of the heavy lifting, that's for sure.
Right, exactly.
This has been so great, Corbett. It's lovely catching up. Is there anything else I should have asked you? Do you have any books that you'd like to recommend? What are you watching on TV?
Right now, TV, we're just binging.
Oh,
on Netflix. One of the shows I'm watching, you shouldn't watch with your kids, is Kingdom, which is on Netflix. It's about MMA fighting. And
we had a lot of fun with Cobra Kai, which is the 30 years later sequel to Karate Kid.
That's on my list. I still haven't watched that.
It's utter schlock. It's perfect pandemic viewing.
I'll have to try that. So that, books, there's several books I'm reading right now. Intelligent Investor is one that I'm rereading, which that's a good book, but it's very thick. Benjamin Graham. I try to stick to innovation, investing, just that whole scope when it comes to reading. And then obviously all the publications. I try to stay in tow with the Financial Times and really see what's happening with innovation. Elon Musk is fascinating to me, how he continually innovates with SpaceX and Tesla. So really just following him and some of the things that he's doing is interesting from a big thinking aspect of things.
I like that his drone ships are named after the spaceships from Ian M. Banks's culture novels, his science fiction novels. A nice touch.
Saw something on Bloomberg today with him, some of the satellites that he's launching, where traditionally, their satellites there's only a certain number of them out there, but they're so high up, he's going to bring them so they're only 300 feet or 300 miles above Earth or something. And he's going to be able to put more out there. That's innovative when you think of 5G and some of the other technologies that we're talking about incorporating over the next 5 to 10 years.
It is a wild time to be alive, that's for sure. Corbett Gilliam, what a joy to have you on the show. I hope we get to have you on again sometime. Thank you so much.
Thank you so much.
Take care.
You too. Bye-bye.
This has been Alchemist X Innovators Inside. You can find the transcript of this conversation, plus links to whatever books, articles, TV shows, and apps we talked about on our blog. And stay connected by following us on Instagram and Twitter. If you found the podcast valuable, feel free to share or tell your colleagues. We love hearing from you. Send us your comments, feedback, suggestions for future guests, or just say hi by emailing us at axii@alchemistaccelerator.com.